Morning, everyone. Happy Monday. Welcome to another market review update. We've seen lower trading volumes over the weekend across the crypto space, most likely as the US prepares for 4th of July celebrations today. We also expect overall trading volumes on the back of that to be lower as US banks for wire payments are closed. Had some pretty volatile trading over the weekend. Indeed, the whole of last week was a pretty negative one for crypto. We can see was it seven straight red candles in a row here on the daily chart. Yesterday was the first time that we actually traded sideways with an ever so slightly green. Starting to see stochastic RSI moving into oversold territory, both the daily and the weekly RSI also in oversold territory. So want to see whether this level can actually hold or whether we start to see some sort of reversal in the short term at least. For the midterm, this key resistance area between 22 to 24.5K remains to be crucial. That's what we're looking to break through before we start to see a different kind of a change in momentum, so to speak. Don't expect that to happen anytime soon. We are also, if we zoom in, how to trade this, if at all. I think, you'd have to be pretty brave to be able to take decent directional trades on this at this moment in time. In the middle of this range, really not much going on. The last real opportunity to jump into a short would have been at the end of last week on the 1st of July. But right now, we're just really sort of trading sideways, crabbing sideways in the middle of no man's land here. We'd like to wait for prices to move up towards the middle of the range around 20,000 or indeed drop down to the lows of the range around 17.7 before we start making a better kind of judgment call on where prices might go next and actually look to enter into the trade. So nothing screams buy or sell at these levels. We're interestingly enough, we'll have a quick look at USDT. So some exchanges on here you can see I think it's FTX offering perp contracts on USDT. Interestingly enough, these stretched to the negative side amongst market participants have been for quite some time, implying that the use of leverage is much higher amongst shorts than it is for longs. What that means in layman's terms is that the traders trading USDT are more confident and willing to take more risk on betting on USDT price moving lower rather than moving up back to its one-to-one peg in the short term. So let's see how that plays out. If we move across to Ethereum. Ethereum has actually not done too badly over the last couple of days, at least compared to Bitcoin. If we look at the ETH BTC pair real quick, we're up about just under 6% from the 1st of July. So the ETH BTC pair just trading higher on the 1 hour chart, starting to overbought territory. So might see a little bit of a pullback today, but overall this is a pretty nice trend. If we actually look at the ETH US dollar pair, decent level here. So we're right in the middle of this trading range that we've been in for the last 2 to 3 weeks. Again, we're just chopping around the middle of this channel. Tough to say whether we would actually look to enter long or short here. Given the weakness that we've seen over the last 7 days, we'd expect some sort of relief in Bitcoin, which would hopefully translate to similar sort of strength in Ethereum. That said, so potential opportunities to go long here with clear stop losses set either at 1,000 or indeed just below this price deviation from the end of last week, maybe at around 990. But again, there's such little volume at this moment in time. Chance to get stopped out very high. You see just these aggressive moves in the 1 hour candles. So this is a very tough situation to be in. You don't have to enter into a trade at these levels. There's nothing to say against sitting back, waiting to see for clearer direction. If we do indeed want to then enter into a long, let's wait to see how prices rally if they do before making that final call. That's it from us this morning. Have a good trading day.